Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. As far as what happened today, markets got the bounce we were thinking they might get. We had the Russell up the most. Dow was the laggard. Some pretty good action across the board. No volume, and we'll see that here in a second. Gold was up. Silver as well. We had the dollar up. Reversed. Got a nice little spike. Not that much on the day, but a nice little spike from the lows. And we actually had the oil market down slightly. Another percent almost. It was down a little bit more earlier, but really a very slow summer day. Really not much to talk about other than the fact that these markets did work higher. So let's take a look at the charts and see if what happened today is any indication of maybe what's going to happen tomorrow. And the first thing that jumps out at you here is that the S&P is coming into what should be a place where the sellers should try to show up if they're going to. So you're coming into, this whole area in here is just loaded with places that are significant. And so, if we're going to see sellers show up, unless we get all the way to the top, if we're going to see them show up, it's going to be here. And the price point on the top is, we could take this one, 2106. We close about 2100, 2102. So about 4 more points higher. You're into the top of the breakdown bar already. That price point was 20. You see what do we got here? 2102 was the high today. The high there was 2102 also. So, you're into that area. What I was talking about with no volume is there's absolutely no volume. There was no volume on Friday's push. There's no volume on today's push, and you got a pretty good price range push. 0.52, 0.5% on absolutely no buyers. But, it is what it is, and that's what it did. If we look over at the small caps, now the small caps got the most bang for the buck today. Also no volume, right? But they're coming off a much lower level. And if you remember when we were looking at the charts on the small caps, they had actually came into a price point that was significant, and it held. And I'm talking specifically about this bar last week. They came into that bar, right? The volumes here compared to the volumes there, just not there. You can see how much lower. Comes in, test it, not enough to knock it down. What are they going to do? They're going to reverse, they're going to bounce it up, and they're going to do the bearish retest regen, which is off this bar. And you're coming back within 6 bars, and so the idea is that you probably are going to get to the top of that area. And the top of the area, 1240. You're trading tonight at 1225, so another 15 points up. What's going to be the catalyst if something's there? Maybe it's going to be the Fed minutes. Maybe the Fed's going to waffle again. I don't know, but that comes out on Wednesday. Fed meeting itself is only 3.5 weeks away. And so, there's going to be a lot of attention paid to whatever those minutes are, and I suspect some money moved around as a result of it. So what we have here is we have the Russell showing us it can bounce higher. The S&P is already coming into an area that's tough. And then if we look elsewhere, over here on the NASDAQ, right, that breakdown bar here, the breakdown bar above it, that's the area that this one's going to try to get to. So you still have more room here to try to push higher as well. So all of these, well, all but the S&P is showing us the ability to go higher. If we move over to Europe, we actually have the same sort of thing here. We've got an inside day. Volumes were low today. I don't have the volumes in, but they were low today, and you've got the inside day. The tail is on the German market, because the German market, remember, this one was trying to break down, got underneath it, right? It's already got under this swing point low. Tries to break down, there's 2 inside bars, tries to break down today, has no volume, and flips back around. This thing's going to come back up, and so it suggests to me that tomorrow, for whatever reason, we're going to see some sort of a bounce take place in Europe. That, of course, is going to put some juice into our markets to start the day, so I wouldn't be surprised to see us start higher. If we go over to Asia, Shanghai still pressing higher, just inch by inch. All the government, desires to get this thing higher is just slowly paying off, and they're slowly driving it that way. But if you look over at Hong Kong, it's a totally different story. This thing cannot lift, and it keeps coming down. And for all intents and purposes, it seems to be setting up a test to come back down and test these lows. Now, it's probably going to be a buy because there's huge volume down here. And the idea that this is going to break that out and just keep going is probably not going to happen. But a test of it, right, with no volume on the test may be the spot to think about this particular exchange. I want to pull over the monthly chart right now. I'm kind of curious about it. Let me see what this one looks like. So here's the monthly, and swing point low here actually has volume on it. That's 24,189. It got down to 24. You got to 22,836, and that low is 22,529. So about 250 points lower. And it didn't have the volume. Even with that big spike down in volume, you still didn't have the volume you had at this low. So this thing might get all the way down, but that looks like a sweet spot if somebody wanted to come in and start buying this market right into there. So that's Hong Kong. Elsewhere, if you look in, and we kind of touched on this last night, if you look elsewhere in Asia, anyone competing with the devaluation that's taking place with Shanghai, right, with the Chinese government devaluing the currency, is getting whacked. And they probably are going to continue to have a struggle. Here's the all ordinaries. Brazil, you just go down the list here. Hong Kong we already looked at. Korea, Indonesia, right? They all are having a tough time with this devaluation because it is hurting them in terms of their competitiveness in the marketplace. The problem for them, though, of course, is they're second-tier citizens, so nobody really cares. In other words, they don't move the world index, so to speak, because they're too small. Now, if we look at the sectors, the sectors are set up about the same way. Look like they can bounce a little bit more. But then if we pull over to the ox markets and look at the dollar, now the dollar got hit, has been slowly climbing back up, but this is still just a big range trade up here. And they were unable, the dollar itself was unable to get back over this area, right, which is kind of the divider between these two ranges. It tested, finally drifted back down. Right now it looks like it's going to try to come back into this particular bar. This is where the volume sits. So, a little push back into this bar, and actually it's right at it now. That seems to be the spot. If it gets under it, then of course it can get down to the bottom of that same bar. But it's just range trading. If it gets over this range, it's going to go attack the highs, and that's really where the move's going to be if and when this thing takes off. Oil still down again today. We'll talk about it here in a minute. There was a question from a viewer. Bonds still hanging. If you look at the equity, not equity, but the debt space, though, there's a lot of angst going on. I mean, here's the high quality investment grade bonds trading at lows now on a yearly basis. If we look at the junk bonds, right? Junk bonds, new lows there, new lows over here on a yearly basis. If we look at the high yield bonds, from a different perspective, using a different instrument, already under the lows, testing the lows on the long-term basis. If you look at almost any of the commodity markets, at lows and going lower. Here's the copper market. And so anywhere you look, the pressure is on as the devaluation and the deflation continue to press against all the economies and all the commodities of the world. And you can see that very clearly here with the commodity ETF, where it's at new lows on the yearly basis, and even worse on a multi-year basis. So deflation, yeah, it's everywhere, folks. Okay, so let's pop over to the viewer question. I did an article today printed on MarketWatch. Energy stocks for a trade, still not an investment. And if you pop into this guy, you know, there's some charts in here and so forth. But the question is like, could I expand upon this? What am I really trying to say here? And I'll just kind of skim in here and then I'll pop over to some charts and look at it with you. But, you know, essentially you had a non-stop decline, you know, followed by a big bounce. And what this article was about, and this is in oil itself, what this article was about was that, hey, this is not done yet, probably. It's probably going to continue. In other words, oil had traded lower, looked like it was going to hold, right? But then it broke lower again. And that break lower, right, extends on an ABC type platform. It says, hey, this thing can go lower. Now, there's some hope though, and not hope in the sense that, you know, it's a long-term trade, because the whole point of his article is it's not there yet. But there is a, you know, an investment, but there is a trade. And the trade is that, you know, the last time we saw this, where oil itself started to slide and started to slide very fast, right? The equities, the stocks themselves in the energy space actually made a higher high, a higher low. So you had divergence between the two. Eventually oil made an even lower low, and again the equities refused to go lower. That led to a big bounce here and actually a huge bounce in the oil market. I suspect we're seeing the same sort of thing set up again. And if I bring up the oil market, you can see it's just a steady, slow slide. Absolutely no bounces hardly along the way. This big spike down back on July 6th has just led to a slow and steady decline. You know, on this particular ETF, it's dropped $4 out of 18. You know, so you're talking about, I don't know, what is it, 20 plus percent? It's not a small number. Now, I got a question, you know, on MarketWatch, and I'll just address it here. Is like, okay, why are you using the USO? Why don't you just use West Texas Intermediate Crude? Well, it doesn't matter. You can use it. It's at the same thing. I mean, yeah, it's not as far, but yeah, it's already broke, right? These are the closing prices on West Texas Intermediate, and it's under the lows. And so, you know, it doesn't matter what chart you look at. You know, I use the ETF because most people can look at the ETF. Most people aren't looking at the futures contracts. So that's the difference. You know, but the chart's the same. And the same is that here you can see the difference where the energy stocks themselves are basically refusing to follow oil down. That's a huge divergence. And more than likely, you're going to see this bounce up and then roll back over, right? And then you're going to see oil itself make new lows probably. So to get some sort of small bounce off of this move, and then probably come down and make new lows again on the oil market. Whereas this one, more than likely, if it's truly going to turn, it's going to make a higher low. And then that's the one that's going to lead to the larger move up. So that's what the article is about. That's how it explains it in words. Here, of course, in pictures along with some commentary. So hopefully that makes it a little bit more clear. So finally, if I circle back to the markets and say, okay, where are we going? Right, what's next? You know, at this particular point in time, I've got the Dow up because the Dow is the weakest of all. The Dow is doing a bearish retest regen off this last swing point low that was broken. That bearish retest regen, right? I mean, for us to get a change in trend, you know, what you need to see is rather than having this, it has to get back over this and hold it for a bar or two. Get up into here and hold it for a bar or two. Then that would say, hey, yeah, maybe this thing's going to go sideways. If the Dow's going to go sideways, then there's the potential for these other markets to actually do something more. And so if we flip over to the S&P 500, as I was saying, you know, this one already is going sideways. It hasn't been able to hold the highs, hasn't been able to hold the lows. It's just sideways movement inside a very large range, about 90 points. Well, that, I guess, is not huge, but I mean, it's a decent size range. So it's about a 5% range actually. So that move on the Dow, if it gets up and over it, then this probably is going to break over this, going to attack this swing point high, and then go back to the highs. That's the setup if we're going to see the strength, we're going to see it there, and we're going to see it down here in the Russell. And the Russell also is coming into a key area. That's right here. That area, that's the breakdown area. And then right here is the swing point low. That's the bearish retest regen. If you're going to break regenerate lower, the ideal way to do it is to not go very far down, so you have a decent chance of getting some spikes back up. And so that's the setup here, and the possibility of this thing changing right from this downtrend it's been in into some sort of a sideways trend. So look for the Russell, look for the Dow, see the weak ones, see how they act, see if they get over it. If they do, and if they can stay over it for a bar or two, then yeah, maybe they can get something going. I suspect in the morning you're going to get a little bit of push off of Europe, and if so, then we probably open a little bit higher, but I don't know that we're going to go very much farther than that tomorrow. If we're going to get a move, it's going to be off the Fed minutes on Wednesday. Either way, that's it for tonight. Thanks for joining me. Please tell a friend or two. I'm LA. This is, and it was, your daily NeoTA wrap. Have a great one. I'll see you tomorrow.